Good morning, guys. Good morning, good morning, good morning. Welcome to my YouTube channel, guys. It's Monday, London session, 11:46 a.m. Kenyan time. So I'm not sure when you'll be watching this, but I'm hoping that it will be helpful whatever time you do, because I just want to do kind of like a post analysis. Usually on Sundays, I do a weekly pre-analysis of the market. So this morning, I shared some setups in my Telegram channel, and which is just my free channel. And I usually just set up my, sometimes I do share my setups, my chart setups. So I want to go through some of the setups that I did post, and one of them being a GU. So I'm going to start with, actually, let me see. So one of the first setups I did this morning, or I shared this morning, was gold. Although gold, I mean, I was already in the trade on gold. I got into gold this morning. So let's go to gold. Let me explain to you guys something. So so this was me this morning on gold. If you guys remember my weekly outlook on gold, let me just do a quick recap. I think gold was, this is the weekly. So gold, this is where gold closed out on the weekly at 1834.584. And what I told you guys was that I was anticipating gold actually pushing up to the 1851. Okay, that was on my YouTube channel. And we saw that gold actually did push up, and we've still been in kind of like a bullish scenario here. But I want to dial it down to I think I then did go to the 1 hour, and then you can see it much clearer. So let me explain a few things. So please note, this is the daily, and then I also marked out my weekly high. And the reason why I am bullish on gold, or was bullish on gold this morning, was just because of last week's price action, which, you know, we have this institutional play happening here. I mean, I just assume this is basically smart money coming into the market aggressively, pushing the market up. And we can see that, you know, we've been having bursts of energy like that. Okay, so this was initially the previous week's, this was on the beginning of last of the month. This was a very strong swing high, the last really strong swing high setup. And then we formed a really strong swing low setup over here at 1782 at the beginning of the year. And then we pushed up, and it wasn't strong enough. We didn't take out this previous swing high, but then we formed this swing low here that actually eventually took out that swing high. Now, just based on that, for me, this was now like last week. Last week was 18. Was last week the 18? No, yes, on Tuesday. So we formed this swing low here, right? And we then pushed up, and this swing low technically is the reason for this last swing high that happened last week on Thursday, before we then saw the retracement happening. Now, for me, when I looked at this, I was like, okay, when we came down here on the 21st, which was on Friday, this was the new swing low that we formed, and it just aligned with this zone level here where we broke structure to the upside. I mean, you can tell there was a shift. Initially, there was a shift of structure here, and then finally broke structure, primary structure here. And really, we've been bullish. And this aggressive move just tells me that we are still bullish. And of course, the market, we are now live and we can see things live. So this is on the 1 hour. So by the time we woke up this morning, when I woke up at 7, or rather when I put, and that's why I've marked this here, because I literally was looking at the chart from 7 a.m. And what I noticed is, so I marked out my liquidity zones and I was like, okay, this is where we are at. This is where the market has opened. But where is the nearest draw on liquidity? So for me, it was this area here. So let me go on the 1 minute, because I had already gotten my bias from yesterday that we would be bullish. And once that was confirmed, when I looked at my candle here, I was like, okay, so we are bullish, check. So let me go on the 1 minute to look at my entry, because usually I find the morning sessions can move really fast. So then, so I got in here and we can just see, so the market opened, shifted lower, and then began to shift up. So my entry was just after this. We can see when we shifted up here, we kind of, we left this demand zone here, but then this shift up, you can see there's consecutive candles that pushed up. So my immediate thing was that I don't think we'll come and retest this demand zone just yet. Okay, we may retest it in future, and you can see we haven't quite yet gotten there until this zone here, and that's why I put another re-entry position here at 10. So price pushed up and my target was up here, okay, at the 1838.719, as I had posted in my channel. It didn't quite get there, but why was it there? Because when I looked left to the previous week, I found there was a demand zone here, and then I found a bit of an imbalance as well that was here. This whole section here was an imbalance, so I anticipated that price would actually go and clear that imbalance, which it did. But then it also just pushed right through, and when I look at that, I can explain it because we have a very weak swing high up here, so vulnerable for a liquidity grab or break of structure potentially, and that's exactly what happened. And then when you look at this previous swing highs here, so this was pretty, not really a strong one as well, and I was actually anticipating that would finally get to the 1841 point, at this point in time, 1841.633. So when I saw this break here, I anticipated the next target would be here, okay? And then possibly, yeah, I think this one here, because we didn't quite take out this level. Anyway, so when I look at the chart, guys, because I'm just taking you through my thought process. So now, first of all, let me be honest, we climbed nicely here, and then at around 8 o'clock, there was this retracement, and then all of a sudden there was this aggressive drop. And first of all, my heart kind of like, oh my God, what is happening? Okay. But we then see that this, this was just, what happens in the market. There was a demand level there that was retested. But, we are also in FOM earnings week, FOMC, and we're going to see a lot of these kind of interesting moves, especially on the lower time frame, that can take your heart out, because this pullback from up here was about 14 pips. Remember, I've already gotten into the market and I'm like 17 pips in profit. Then all of a sudden I'm 17 pips in the opposite direction. And I just missed my take profit. And that's why it's good to take partials, okay? But I was targeting this zone here because I was looking at getting at least 20 pips in. So I didn't want 17 pips. So I didn't close out. But then thankfully, it did go and smack my point that I was patient. I didn't panic. I did panic, but I didn't get out of the trade, and eventually it smashed my target. And then once that happened, when I saw this aggressive move here, I also knew, I know what's happening. There is pending liquidity upside, okay? and there's a weak, remember we saw the weak previous swing high, so I knew that was going to be retested, and it was. And then we dropped again, and then as we pushed up, we left some more liquidity. So this was now, looking like it's going to potentially end up causing a liquidity run, because in as much as we are bullish on gold, it's not just going to travel in a straight line. And this is what I've been teaching in my class to my students in the Forex coaching class, that the way institutions really trade at the end of the day is not the way we trade. Then they're just looking to fill in their orders and ensure that they're able to close on all their positions, whether in whichever direction, because basically for them, they're taking positions on both sides of the market. So because of that, they need to be closing out the negative positions as they are continuing to push the upside. So when I saw this move up again, I was like, dang, okay, this looks like, because this just looked like we're taking out this liquidity here. And then we dropped. We didn't quite break structure, but then here we did. And that's why you can see when we retested this zone, it wasn't really a strong rejection, okay? And we had to kind of push up and retest this previous supply zone again before we dropped. So it's just been, and so when we dropped here, I didn't get into this because I'm like, okay, I'm biased on the bullish side of things, and this for me is too short target to enter on a counter trend. If it's a counter trend, I want a bigger move, because you don't want to counter trend and then you get caught out and you find yourself in a necessary drawdown as it's going up. So, but I knew that there was a pending position of demand here, okay, which you can see was smacked, and then we pushed up, and this was now the London session entry. I know by the time I posted the chart, maybe some people missed this entry, and that's okay. But then there was also opportunity to re-enter. Like I teach re-entries as well. And I think I've done a video on how to re-enter trades. So this was a clean re-entry position, especially after an aggressive move here. I knew that price would actually come and retest that zone, and then possibly push to the upside. And as you can see, we finally have taken out the liquidity here that we were targeting at the end. This would be a 50 pip target. So if you are patient enough to hold this pullback here, okay, in case you missed this, you'd still be in good profit. And you can see my pip target stop loss is 2.8 pips. Here, my pip target was 3.9. And really very clean entries, because we did not at any time get into drawdown. So hopefully this is making sense. And, I'm still looking at 1847 as a longer term target. Okay, so I'm still bullish on gold. We've gotten to a point whereby we are, playing the way we like to play. We are trying to confuse people in the market. I think we are still very bullish, but institutions need to clear out their negative position, because they are buying, or we are buying, but they are also selling at the same time. I hope that makes sense, and obviously maybe in a future video I'll explain what I mean. So that is gold. I don't want to spend too much time there. I've already spent sufficient time. Let me go to GBP. I think the next trade that I gave was, and if you don't understand anything, just write a comment and maybe I will answer your question in the next video. So the other trade that I also shared after gold was GU. Okay, so GU, I was bearish on GU. Was I bearish on GU? Am I lying? Am I saying the truth? Let me look at GU. So on GU, yes, I was bearish on GU. So this is how I didn't take the GU trade. I just marked it out. Yeah, so sorry about that, guys. Now, first of all, so, we literally have been, we formed a swing high position here. And then we then began descending last week. Now, this, for me, like I said, I was on the charts from like 7, so I just marked out my time and I was like, okay, I want to see what's happening. Will GU scale up and try and, retest previous supply zone at 1.35621? So that was an initial target. I was like, okay, GU is actually going to try and retest this zone. And then what happened was, I saw this, those are an earlier supply zone here. And, from this swing high here at 1.3587, this one here, 35587, and we see a break of structure here. So this is a very strong swing high as well. And I was like, okay, I don't know if price will break above that right as of now. So I was just like, okay, hold on guys. Oops, sorry about that. Yeah, so we broke structure, and then we retested this zone. Now, for me, I didn't immediately see this setup. I would have initially just jumped in here. But what I'm learning is sometimes when price gets to the supply zone, it's not always a fast, hard, kind of thing. It, especially, we're on the 1 minute. I'm sure if you look at if I was to, I mean, this is the last up move. So if I was to, like narrow this down, this would have been a better entry, okay, over here. But I didn't look that deeply. It's a Monday after all. So, we're just trying to catch up with the chart. So this would have been an initial entry, but I didn't get here. I think I missed it. And then I came in and I saw this happening. Okay, so what I had assumed was that, first of all, this was a strong swing high. So I didn't anticipate that we would break right away. But I said, if we did, then the target would be this high. And then when we didn't break and we actually broke down, okay, so we formed this swing low, then we formed another swing high. Okay, so what I said was like, okay, we've taken off these highs here, and then we've mitigated this high, and then there's a breakdown of price. Now, for me, I was like, nice. What I want to do is now enter on the retest. Actually, a really nice entry would have been at this level at 1.35572, but I didn't see that far, and I decided to just put as a pending order, over here, and then put my stop loss just at the previous high here. And this is a 1 pip stop loss. I obviously didn't enter this trade, but this is a very beautiful, beautiful trade. And I did share it, but I did share it later on because obviously I had not posted. I shared it in my group around 9. So it was not viable, but I was just telling people about, the setup that I was expecting. I didn't enter because I was in gold, so I don't trade gold with anything else. So now I was looking for the London session setup, okay? And why my target was, you see, this is where the market opened, right? And we can see, just to explain a few things as well, on the 1 minute, we can see there was a gap that formed here when the market opened and price dropped. So yes, our bearish bias was accurate, but because of this gap, it had to be filled. And in so doing, we went up and took out previous levels. And so for me, my anticipation, my first target for my TP was here. Okay, it was at this zone. I remember that's where it was at first. And we got there. And then now the next TP level was literally, if I look left, was there a left? Let me go on the higher time frame. Let me go on the 1 hour. So yeah, so the next target was actually here at 1.35. So let me just mark that out over here. Okay, this was the 1.35321. That would be the next target. And you can see there's liquidity downside on this end, right? So, and we are actually headed there right now, or look like we're heading there right now. So for me, so we are bearish on GU, okay? And if you look at my weekly setup, I don't think I've deleted the drawing that I did on the chart for the weekly analysis. This is the demand zone I'm actually targeting. So we are still far off, okay? But now because the market has just opened, you can't wait to now buy down there. There's a move that can happen. So I knew that despite us being bearish, we had left liquidity levels up here. So you can see I've marked them out, and that's why I ended up in the London session deciding to take this trade. So when I saw this last liquidity grab here, we took out this liquidity and then we pushed up and broke structure here. It confirmed my bias to come and clean out this previous level. Now, why did I feel like this was a level that we could come to? Because this was a swing high, but it wasn't a very strong swing high. So I anticipated that price would actually get there, and it did. Okay. I actually thought it would even go higher, but I think that we'll revisit maybe later on. And so this is like what, an 18 pip, no, not much, 18 pip target with a 3 pip stop loss. So really pretty much a clean trade with a 5.06 RR, which is good. So this would have been a 6.068 RR, which is also pretty good, but we made it here, so that's fine. And then after that liquidity kind of thing, I don't think we really took out liquidity, and I think this is still viable for a future visit. But the fact that we are bearish, I'm just gonna watch and wait, because I'm hoping that maybe we'll get to this level here at 1.35321. So guys, you can see how I looked at the session during the London. So let's look at another pair that I looked at. Hopefully I can speed this up. I think I've talked about gold. UJ. Oh god, UJ. I don't trade UJ much, so I'm not surprised when I get it wrong. And I really did get it wrong. So I was actually bullish on UJ on my weekly analysis. So that hasn't played out, people. Was I bullish? I think so. So anyway, when I look at it now in hindsight, because hindsight is just the best. So I had put, London session, I was like, okay, I think we are going to buy here, because of my bias. But when I think about it again, I really didn't look at this pair critically this morning, obviously because I don't trade UJ. I looked at it later. But when I look at the price action earlier, yes, we've been on a buy. Okay, and that's why I've been bullish on UJ. But also, and we've been looking at, like this is the range. This is literally the range. So I had put my trading range, something like that, like, okay, from this swing low, because this swing low is actually what caused this swing high, and subsequently this one. So I was like, okay, I think this is a good place to buy, okay, because we have retested this point where we broke out, and that's why I actually called out this setup in my group. But you can see how that played out. We did go into profit for a few pips, about 6 pips, not bad, with a stop loss of like 2 pips. But you'll see we got smacked out. And I keep on saying stop loss is really good, because if I didn't have a stop loss, I'd be in a drawdown of like 20 pips. Nobody wants to be in a drawdown of 20 pips. So this stop loss of 2 pips saved us. Again, I didn't trade this pair. I just shared the setup in my group, and was like, okay, guys, this is something maybe you can look at. So whoever actually just jumped in blindly, maybe they got caught out on the 2 pip stop loss, which is fine. But let me now explain in hindsight why my bias was on the short term was wrong, because you can see we pushed up. We were pushing up from the previous week. I mean, actually, this is earlier in the morning, the Asian. We can see, yeah, we were bullish from, which is fine. Actually, I said we were bullish. We're going to be bullish on market open. And yes, we were bullish, so that bias was correct. But at some point here, okay, we formed this swing high, and then we formed a new swing low into the Asian, into the deep Asian session, kind of, right? And I mean, into the end of the Asian, right? And what we are seeing is price continued to rally, and then it took out this previous high, okay, this previous Asian high. And that should have been a sign for me, because I'm like, okay, you know, and then this rejection here, this drop, I mean, this is just very clear price action showing us bearish momentum. So I missed that. Had I seen that, if I'd been in the market earlier, I would have seen this would have been a very good sell opportunity all the way down, and my exit would have been down here where we opened, because the market opened around here where there was this mini drop. So this would have been my exit. This is the 1.113. So let me just mark that out, okay? Because the market opened around here, pushed up, okay, and then retested and started the climb. Okay, so very good. I mean, if you entered there at the midnight or Kenyan time, you'd have really, you know, this was a really, really good place to enter the market. And that's why sometimes I say when I do my weekly analysis, it's good to just check how the midnight candle plays out Kenyan time, because this was a good 35 pips, clean, clean, clean 35 pips. But I don't trade the Asian on Sundays. I'm a London baby. So this here would have been my final target from this sell position. Okay. So right now, as we speak, I'm looking left to see, okay, what is, there was pending targets below here that I probably didn't look at. But I know I can see it on the 1 hour, this target here. So there's, you know, so yes, we did, you know, push up, but then we did push up, and then, yeah, so this push up is what I was like, So I think this was premature because just even if I look at it from accumulation, kind of reaccumulation or redistribution kind of thing, because this is actually redistribution. I should have seen this coming, but yeah, so we missed that, guys. Anyway, hopefully that makes sense. Now, the other pair that I gave was AUDUSD, and I think that was the last one, and it went okay, that and US30. Okay, it went okay for the better part. We are seeing right now we've been stopped out, but before we got stopped out, this was a 3-pip stop. We actually rallied upwards for like 14 pips. Okay. Again, in hindsight, we are in sell territory. Okay, so I also didn't look at this pretty nicely because I mean, just price action. Now that I look at it, I'm like, price action, baby. We opened the market lower, and then we pushed up, retested the supply zone here, and kept on scaling lower highs. So when there was this breakdown of structure, I should have known that this would have actually been a better entry up here and would have really like had a 2-pip, 3-pip stop and just vamoosed to the ground. Okay, so that was my bad. Okay, so however, in the London, I did enter when I saw this breakout to the upside. I entered on the retest, and so we grabbed some pips. And this was actually, in hindsight, let me see. I don't know why it stopped here. Let me look at the 1 hour and see why it stopped there. Oh yeah, because yeah, from this, yeah, so this was a good exit. So I didn't look at this perfectly again, but yeah, that's where we're at now. And we may now begin to see price now push up. Okay, so that's AUDUSD, and then now the trade of the day. Yo guys, should I look at US30 first? Let's look at US30 because that was another trade that caught us out here at 12 points. 12 points. So US30, again, this was a really nice, entry up here. I didn't get into it again, guys. I was in gold, but this was a setup at around 8 that I had actually marked out. And we dropped really nice. You can see this was a clean 146 points. But I didn't like share this setup in my group. It was a bit late by the time I was doing it at 9 o'clock. And then what we see is breakdown of price and then a retest of the supply zone and then a nice. So this would have been the perfect entry downwards. And then for me, I was like, okay, I'm on a counter trend. I know US30 is dropping, but I'm on a counter trend. So I see an opportunity for a counter trend. And I saw the opportunity once we formed this initial swing low, and then we came and kind of took it out, and I saw the break of structure to the upside. I was like, you know what? We are definitely coming to retest the break of structure. So this was my initial entry, and we were in profit for like a few seconds. 24 points, which is fine, but this was not an ideal entry, guys. Again, this was not, I should have waited for price to come back down all the way to the demand zone, see what happens there, and then call out the setup. But now, because I know there's still opportunity for a counter trend, as soon as I saw this price push up and form a lower high, or rather a higher low, and retest and break out, I was like, yeah, we good. So, I was like, guys, we are good. And we did get out at the previous liquidity point, which was there, and then we smacked ourselves to the downside. So that was another trade that didn't go perfectly, but again, we kept our stop loss tight, and 12 points on an index is not bad. Still kind of a bit crazy, but please know that before that, we were about 24 points in profit. So yeah, that's US30. So yeah, we get some right and some not so right. So let me look at the trade of the day, which is EURCAD. It played perfectly. You know those trades where you look at it and you're thinking, dang, I should have entered that trade. So EURCAD is bullish, yes. However, so what I was looking at is after this really long drop, I felt like when we got here, we kind of found our base. And then with there was this aggressive move down up, okay, which, we kind of have left some imbalance. So this is a future point of target. And that's why I just marked it out. And when I saw price pushing up, I was like, okay, as soon as I start seeing a change of character in the chart, I'm just going to take a quick sell. I'm going to place a quick sell. So as soon as I saw this setup happening here, as soon as I saw this here, I was like, this is perfect because first of all, I knew that on the short term, we had taken out previous highs here, last week's highs, retested liquidity levels, supply levels, and then when I look at the chart, zoom in, we see that we've been bullish, okay, and consistently, and just taking out previous highs, but then something interesting happened here. We retraced, took out this high, retraced, and then created liquidity here, retraced again, and then took out that liquidity with this candlestick here at 1040. And then what happened again? We just cleared that again completely, and then broke down. And when I saw this breakdown, if you guys just see how I have literally, there was a breakdown here. Okay, there was a breakdown here. So if you guys look at it, this is where now I put my entry. And by the time I put this setup, price was down here on this candlestick and was just about to smack the entry. So this was a pretty clean trade, and I put the stop loss just above this high, actually at the high, 3 pips, and we literally dropped and took out this liquidity level, which is the partial profit here. But this was really my target, 29 pips. I mean, this is an R&R of 8.8, guys. I mean, this was a really, so this is a trade of the day in the London. And after that, yeah, we are going to wherever we are going to. So it's kind of like we're targeting this high here, which is fine. But yeah, so EURCAD is the trade of the day, guys. 29.30 pips, pips in profit, clean setup. And yeah, so guys, this is just a post analysis. I hope you've learned something based on my pre-analysis that I posted yesterday. And yeah, so I just, if you like this video, please like, subscribe, smash that notification bell, share this content, and help us, get more visibility with more people just looking to learn how to trade and so on. So yes, see you soon, guys. Bye.